Hey guys, Steve Zonardo here with Remax West Zonardo Associates. Happy Monday morning. Just a real quick update on the market. Current inventory right now, we're at 13,032 units, so up about a couple hundred units since last week. Sales did drop down about 25% since last reporting. Last week we've had about 800 plus sales. This week we've had about 532 sales. Obviously, is that a direct correlation into the Bank of Canada rate hike? Absolutely, for sure. I mean, we've gone up 75 basis points in the last week. And we know that the higher the rates go, the more that our buyers can afford the properties at current prices. We got to continue to lower pricing to kind of meet these buyers at some point. And again, this is not a shock. I kind of predicted at the 0.75%. I would say, even though the Bank of Canada is meeting 2 more times this year, I would imagine this is the end of the rate hike for the year. I think they've done enough change and damage that for the rest of the year to kind of give everyone a break and kind of assimilate with their new payment amounts going forward. And I believe next year we start a little bit with this rate increase hike, maybe a quarter basis points at a time. But remember, we're at 3.25% now at the overnight lending rate. Pre-COVID, we're at 2.75%, which was a good normal market where we're able to get mortgages. You know, it wasn't crazy. The market was nice and a very ebb and flow. Properties would come on the market, stay on 2-3 weeks, then they would sell. Like, those were the good old days, if you want to talk about it. So right now we're obviously in a correction mode, and we don't know how long and how far this is going to be. We know the Federal Bank of the USA is meeting September 20th and 21st. They're going to have another rate increase, probably by either 75 basis points or a full 1%. We'll see how that affects us here. The only thing is, if you are trading currencies, or if you are buying real estate in the U.S. like we are, we're doing business in both countries right now. We're following the U.S. currency or the currencies rather, very in depth. So we know that if the oil, the cost of oil is going down, that affects our dollar, where it weakens our dollar, and the U.S. dollar overtops it. But since our rate increase of 0.75% of last week, we've seen our currency actually come up in value, which is pretty good. So if you're looking to buy U.S. currency, you'd probably want to do it between now and before the 2021st is, because then the U.S. is going to increase their overnight lending rate or their bank rate, and ultimately that's going to bring our dollar further down. This is what I've been told. So like I said, we got 2 weeks to be buying currency. That's pretty much a new thing that I and I'm not aware. Like, when I invest or I do mortgages, I'm very there's no risk. I like to do the least amount of risk as possible. And even with mortgages, I'm not aware of all the products they have to offer, because if it sounds too good to be true and there's a way that's going to fail, then I want to avoid that at all costs. So, based on the variable rate right now, I learned that, because when I usually deal with Scotiabank, if you're in a variable mortgage, as the rates go up, your principal and interest goes up. And we have one of these mortgages locked up into one of our rental properties. But again, not to bore everybody, that was because we were doing subdividing the lots off the back, and if the bank finds out, they can pull the mortgage. So I kept an open variable. So if they did kill the mortgage, my cost of buying out that mortgage would be just a couple months of interest rate. So this is why we did that. Obviously, we got stuck in this mix, or else I would have locked in, due to the fact that we weren't completed the full severed the lots, or the complete severance of those lots until like August of this year. So it was already too late. So fast forward into what I've just learned now, that TD, RBC and CIBC, what their product is basically, they were saying, hey, we'll give you this super duper low rate. It's going to be a variable, locked in variable at the super duper low rate, but there's a trigger point. If our mortgage rate goes up to like 4 to 5%, then we hit this trigger and we got to renegotiate a new amounts in order to go forward. Obviously, if you talk to anybody in the last year or two, everyone was so bullish on the market, saying that, hey, the Bank of Canada nor the government would want this market to collapse. So yeah, let's lock into this product because it's a great product. There's no way that we're going to go to 4 to 5%. I heard this 1,000 times. And I just hate to be in a position where I'm going to be at the mercy of banks, because obviously everything's black and white. If you're losing the property, they're just going to pull it and sell it. They don't give a shit, right? So that's where my fear is with banks. So I always try to do 5-year fixes and set and forget it kind of scenario. But just kind of going back into this trigger rate, and if you looked at if you ever watched the movie The Big Short, Michael Burry was one of the main investors that was hedging on the American market, housing market failing, and everybody thought he was nuts. But what he was looking at is basically, and this is the same scenario, just spun up a little bit different. What he was hedging on is that, people got into these massive mortgages, where they called ninjas, no income, no jobs, no assets, early on, locked into a rate, a very, very low rate. But now the cycle has turned where the interest rates has come up dramatically, and now it was like the perfect storm, right? Where now people have to renegotiate with banks to get a new mortgage. So their renewal was ending in new mortgages, and now the new rates were probably 4 to 5 times more than, let's just say, or percentage-wise, more than what they locked in originally. And this is a similar situation that we're facing here in Canada, where it's like these trigger rates. Now they finally triggered in the last 75 basis point increase, and now banks are going to start calling their clients in order to renegotiate or tell them their new payment that they're going to be paying forward. So quite scary times. So that's pretty much that. So that was Michael Burry's prediction why the market fails. So if there's something that's going to further our decline in property values, is this beautiful surprise I just found out 2 weeks ago. Like, I wish I would have known this earlier. I would have even been more bearish. But anyway, just kind of reading this. This is an article on Bloomberg, and it's, the bank. This is the latest bank of rate hike will hit some Canadians when it comes to paying their mortgage. Central Bank increased the policy rate to 75 basis points to an overnight lending rate of 3.2%. Remember, we were at 275 prior to COVID. And according to Rob McLister, a mortgage strategist with the Mortgage Law News, Wednesday's hike will typically increase monthly mortgage payments by around $42 per 100. But here, if we kind of look down, he's talking about the trigger rate here. It says, looking back on March 1st, when this rate hike cycle began, if you compare a typical prime minus on 1% adjustable rate mortgage, between now and then, you're talking about $154 per month based on $100,000. So let's just say, and again, York Region, if you were buying a townhouse in the last year, you were probably paying 1.2 to 1.3 million, depending where it is. So I'm talking York Region up to like Highway 9 and then 4. And when you got into Woodbridge, you're probably paying 1.4 to 1.5 million for a townhouse. So if you're putting 20-30% down, you still had $1 million plus mortgage. So let's just say an average mortgage of $1 million. If you locked into a rate like this, let's say early on, you're paying about $1,848 more than what you were paying, let's say, in March, which is substantial. So if the rule of thumb was every 100,000, it was $500 on every 100,000. On $1 million, that's $5,000. Now you're going to add this. This maybe it was even less. Maybe it was like $3,500 to $4,000 prior, and now you're adding another $2,000 on top. So your payment's going to be between $5,000 and $6,000 now on $1 million, which is quite scary. And obviously, not many people. If you're in a fixed income, where do you come up with this extra money? So either you're forced to sell your house at a discount, or now you're basically pulling extra lines out, lines of credits, trying to pay steal from Peter to give to Paul. Basically, that's what's currently happening right now. If we go to the TD mortgage rates right now, our 5-year fix close is 5.34%, but we got to pay attention to this number. This is crazy, right? 5.6% is the TD prime rate. And again, I always say if you're dealing with mortgage agents, they'll be able to buy some of these rates down a little further. So these are obviously just posted rates, and the rate that you're going to get is going to be a little bit different. So that's basically it on the mortgages. Another interesting topic, and if you're into, let's say, renovations, you're in the building development world, this is actually good news, because remember, in North America, we build our houses out of wood. It's called stick construction, where floors, walls, roofs, everything's done out of wood. So this dictates the cost of housing in our market. So if lumber is going down in value, that means cost of buildings going down in value, which means that if you're looking to do anything with the build development section or renovation, you're going to be paying less money in the future. So if you look at this over the last 2 years, it says lumber prices have been just as unpredictable as most other facets of life. Even last October, when we reported a decline in lumber prices, we could not have predicted yet another peak in occurrence since again and another decline. So we know this has been going up and down. And I pulled out the commodity value of let's say the lumber costs. So this is basically on lumber. So lumber's I believe it was based on one foot by 1 foot. this is how they calculate so basically 1 foot by 1 foot is where they're coming from. So it's almost like it's not a linear board foot, but it's basically 1 square foot is where they're coming in with these costs are. So if you kind of look at the height of the market, which was March of this year, we're at 1,441 USD per let's say square foot. And then ultimately right now, if you kind of look at the trend going down, we're at $509 per one board foot. Look at pre-COVID, right? Pre-COVID, we were down, around here, right? 360, 400. Like, this is normal amounts, and cost of building was a lot less, let's say, than the height, which is, astronomical. If you ever got quotes to do anything, even like a fence or a deck, everything was like jacked up so high. And if you looked at right at COVID, when everybody thought that construction was dead and no one was going to be spending money, the one board foot came down to $264 a US foot. And then, we had these massive spikes, right? And that's pretty much it. And even for us, we're in the middle. So we bought another house, a secondary home in Florida. So now we're obviously negotiating with the pool companies there. I mean, Florida, it's worth it to have a pool, even for resale. Like, it's not only an enjoyment that you're going to have, but it's also for resale value. It's very important to have. It's almost like having, I don't know, in North America, maybe a finished basement. Let's just say it's that important to have, especially it's outdoor space and you're going to be utilizing it 12 months out of the year. So it's important to spend some money there. And if you ask me, in Canada, I would never put a pool, but Florida, you need to do it for sure. But anyway, just negotiating with the pool companies. So they're coming off of the yesterday prices of cost of materials, and obviously the demand was so high, and they're still pricing pretty high. I got like 3 or 4 quotes. We're starting to see a slip in the quotation, but as I told my wife, let's not do anything until next year, just based on building costs or building materials going down in value, and obviously less people doing it, giving the let's say the contractors more wanting to do your job at a better price, because that's how they live, how they're going to live if they can get these new jobs. So that's pretty much it. So we'll be in a power position, let's say by mid of next year, where regarding trades and additional renovations around the house. That's pretty much it, guys. Sorry for all these morose news that we're always talking about now. I'm hoping to have some optimistic news in the future. I mean, ultimately, if no one's reporting about what's really happening, I mean, this is not good for the general public and us making decisions. So if I have any information that I'm kind of using to kind of hedge and better, my decisions with investing, or just basically getting a mortgage, or just supporting our lifestyle, or giving our children a better chance, we're definitely going to talk it out loud here on our little social channel. So if you have any questions, always reach out, 647-962-4372. Have a great day. Bye-bye.